How to master mechanical trading. Welcome to this mechanical trading course. At the end of this video, you will know exactly what mechanical trading is, what the benefits are, and how you can build your own mechanical trading strategy. So let's get started. Now, before I dive into the presentation, are you on Discord? I've created a free Discord channel where you can talk to me, other like-minded traders, and you get access to exclusive trading content. So if you are on Discord, click the link in the description and join the channel for free. Now, let's get started. How to master mechanical trading. That's what we're going to discuss today. So let's dive into the presentation. I will start by talking about what is mechanical trading exactly, what are the benefits of mechanical trading, my mechanical trading strategy, how to build your own mechanical trading strategy, how to backtest your mechanical trading strategy, questions, and more at the end. All right, so what is mechanical trading exactly? A lot of people have misconceptions about this or don't really know what it is. So in my opinion, mechanical trading is systematic trading that can be automated. So you have rule-based systematic trading, but that can be automated. And then you have mechanical trading, which is just a set of rules that you can put into an EA or an expert advisor and that can trade the strategy. That's what, in my opinion, real mechanical trading is. So there's a difference between rule-based trading and mechanical trading. Usually it's built out of if-then statements. If this happens, then I do this. Clear, objective rules. So to give you an example, if we get a daily close above the previous 2 days highs, buy a pullback into the previous day high with a stop below of the breakout candle and target at whatever it is. Do you see how clear, how rule-based this is? This is something an expert advisor can do. This is clear and objective, and this is, in my opinion, mechanical trading. If I wrote down, if we break out of a 2-touch level and I enter on a retest, then it becomes more rule-based, because what is a 2-touch level? How are you going to define those touches? Now I said daily high. There's only one daily high on the chart of the previous day. So it's really objective, really clear, really simple. That's what I like. So let me show you this on a chart. All right, so we're looking at the chart, and if you remember the rules, there we go. If we get a daily close above the previous 2 days highs, buy a pullback into the previous day high with a stop below the low of the breakout candle. Here we have a daily high, and a daily candle that closes above it. We will be entering at this high because this is the previous day high, and the stop will be below the low of the breakout candle. There is no guesswork here. Like, it's clear, it's simple, it's planned out, and because it's so mechanical, it's very easy to backtest and to execute, etc., etc. I will dive later into this, but for now you can see how clear this is, and this is why I prefer trading like this, because it just leaves no room for error. Now, when you're developing your strategy, you will find certain things. For example, does this have to happen the day after this? Or what if we ranged and then got the breakout? Or what if? You will get all these types of ideas, and that's when you refine your strategy and build upon there. So this is just a quick example of how you build your mechanical trading strategy. Now, what are the exact benefits of mechanical trading? Like, why should you choose for this way of trading? First of all, it's easier to discover edge. Why is that the case? Because if you have a very objective black and white strategy, it's very easy to gather some data about it. Like, how did this particular rule-based strategy, this mechanical strategy, how did that perform the last 10 years if I traded it the exact same way as I just wrote down? How did that perform? That way you can discover if there's any edge in doing that. The next thing is, it's easier to execute in the live markets. Like I just said, if you have a clear objective strategy, there is no, is this a good setup? Yes or no? I'm not sure. You're sure, and you're sure all the time, because everything is planned out and everything is rule-based. So that's another really big benefit. Less emotions. you don't have doubts. You don't have this anxiety that often people get when they are discretionary trading, because they're never sure, like, should I take this trade, yes or no? You have less emotions because the only thing you're doing is following a rule-based mechanical strategy with a plan that you have tested, and that really takes a lot of emotion out of it. This also leaves less room for mistakes because everything is objective, because everything is planned out, and it's easier to improve the strategy. Why? Because you can quickly get the data about the strategy that you have. So when you're trading it in a live market, you can quickly attach data to the strategy because it's rule-based and because it's mechanical, and then you can find ways to improve it. So all in all, if you take a look at those benefits, I would say it's a no-brainer to start trading with a mechanical trading strategy. Now let's talk about my mechanical trading strategy. And if you've been following my channel for a while, you know I trade mechanical. I've been trading for well over 6 years right now. And it's all mechanical what I'm doing. Now, my strategy is based on the D1 and the H1. I have around 15 trades per month, and I'm currently trading around 16 instruments. So on average, a trade per month per instrument. My strategy works in multiple markets. I've tested it in crypto, commodities, and FX, and it works in those markets. I define it as a momentum breakout edge, and I will go to the chart right now to give you an example of this. All right, so we're looking at the euro dollar chart, and I've put in some lines, and this is a long trade that I took back in October, and it's a prime example of what I do. So the concept behind my strategy is simple. I want to see a range. I want to see a false breakout of a range, and then I want to see a real breakout of a range. And then I want to buy in this area and play for the next leg up and get out. That's the idea. If I want to sell, I want to see a range, a false break of the highs, then a real breakout, and I'm selling the next leg down. Really simple trading concept. Why does it work? It's because people often place the stop below the ranges, and I want to see those stop orders being absorbed by potentially a bigger player, and then I want to see price holding and then a continuation. Now, this might sound like it's not mechanical. That's because I have very mechanical rules, but of course I'm not giving it away here. These are only for me, for the people I work with on a personal level. But that's the concept. So let me go through this trade. So we had this trading range. We had these equal lows. We take out the equal lows and then quickly shoot up, hence momentum breakout. What I then do is I put in my entry. In this case, my entry was this red line, basically a retest of the breakout, and then targeting this level here with a stop below that wick right there. And as you can see, the risk reward is around like 1 to 2.5, something like that. And this is just how I trade. Again, it might seem a bit vague, but that's because I'm not giving you the exact rules for the strategy, the entry, the stop, the target, etc. But I can tell you right now that everything I do is 100% mechanical, objective, back tested, everything right there. And this is just an example. I believe that most trading strategies can be made mechanical, and when they are mechanical, they are just easier to trade, like I said before. But this is exactly what I'm looking for, and this is also what I teach the people that I work with one-on-one. And here we just have one of the sheets I have. I test so much, but this is just an overview of the particular pairs that I trade, the returns per pair, per different entry type, in terms of R, average win rate, etc., etc., etc. So, like I said, everything I do is tested to see, did it work over the last 10 years. Here we have another big spreadsheet. So for every pair I trade, I have these types of spreadsheets. And I tested this exact strategy that I just showed you on the screen to see how did it perform over the past 10 years. And if I go down, you can see a nice graph. And you can see that in terms of R, and if I risk 1% a trade, this is a profitable strategy in this pair. I don't trade a market if I never tested it. I want to test it first, then I start trading it. So this is just an example of the many Excel sheets I have to determine if there's any edge. All right, so how to build your own mechanical trading strategy. You now know the benefits. You know more about my strategy. You know what to look for, what mechanical trading is, but how to actually build your own strategy. It starts with point number one, and that's picking concepts that you like. There's a difference between concepts and strategy, and most people don't even know this. For example, they learn smart money concepts, and they think they have a set strategy, but it's just a concept. For example, supply and demand is also just a concept. A strategy is, if I see this supply zone, then I do this, I put my stop here, I put my target here, I risk this much, etc., etc., etc. A concept is just, okay, this is how this concept works. A strategy tells you exactly what to do, when to do it, etc. So pick concepts that you like. For me, I like the breakout with the false breakout. So that's the concept I like. It's based around the Wyckoff method. That's what I like. Then I build rules around those concepts. So what is, for me, the perfect range or the perfect breakout? How do I define it? Where do I place my entry? Where do I place my stop? Where do I place my target? If you are going to trade supply and demand zones, how are you going to define the supply and demand zone that you want to be trading? Because there are so many supply and demand zones. Which ones are valid for you? Determine which ones you want to be trading. Build rules around it to identify those exact supply and demand zones, and then build rules. Okay, if I get the right supply zone, I will enter here, I will put my stop here, target here, etc., etc. It can take some time to go from step 1 to step 2, because this is the part that most people skip or struggle at, because they just keep trading concepts and never build an exact strategy around it. So this might take some time, but this is what you need to do to build your mechanical strategy. Now, when you build the strategy with the exact rules, it's time to gather some data. And you want to see, like I said, did this particular strategy with those rules perform in the last 10 years or so? That's the question you want to answer. And then, how did it perform? Did I have huge drawdowns, or was it quite a steady ride? Those things are things you want to discover. But the first step is gather data. And gathering data is what most people, again, skip, but it's the most important part. Now, like I said, when you have the data, then you analyze and improve and prevent curve fitting, guys. Most people just optimize the strategy way too much, and it looks good on paper, but you have to realize that the more you optimize a strategy based on the past, the less likely it is to work the same way in the future. So keep that in mind. Yes, I'm a big supporter of improvement in your trading, but I always keep in the back of my mind, am I curve fitting, or is this actually real improvement? So always keep that in the back of your mind if you find something to improve. For example, if I'm making improvements in my strategy based on data, the data has to make sense to me. I always tell this story of, let's say, 5 years ago, you got hit by a car 2 times when you were driving on your bicycle. 4 years ago, you got hit 2 times by a car when you were driving on your bicycle. 3 years ago, the exact same thing happened. And then based on those occurrences, you're like, okay, next year I will definitely get hit 2 times by a car when I'm on my bicycle. It doesn't make any sense. Like, logically, you're like, why the fuck would it happen again? But if you take a look at the data, yes, it might make sense, but I call that empty data. The data has to make sense with your strategy and the market. So always keep it in mind when you're improving and with your strategy. Now, how to backtest your mechanical trading strategy. I get a lot of questions about this because most people just don't know how to backtest. Most important thing, use a consistent data source. If you're testing with one brokerage data, don't use other brokerage data. And this is especially for you Forex traders, because there is no centralized exchange or anything. Brokerage data can differ. So when I'm testing a strategy, I use the exact same data for every pair, every market I trade, because that gives you the best picture of what you're doing. Test your strategy on different markets. if you develop a strategy and you test 20 markets and it only works in 3 markets, you probably don't have a pretty good strategy. If you test 20 markets and it works in 10, 15 markets really well, and then in 5 markets, it's around break even or slightly down, that's way, way better. So test multiple markets because you want a robust strategy, not one that just happened to work on accident in a particular market, just by pure chance. So that's really, really important. Then we get sample size and time span. I often tell people 5 to 10 years back in time and at least 100 trades per pair that you're going to trade. Now, it depends on your strategy and your frequency, but go for 5 to 10 years back, 100 to 300, 400 trades per pair. That's like the best thing you can do. And then, of course, if you did 10, 15 pairs, then you have a big sample size of a few thousand trades. And like over 5 to 10 years, that gives you a clean picture of, okay, did my strategy work well? Why 5 to 10 years? Because you want to test a strategy on different market environments. It can be the case that your strategy worked extremely well last year, but the 5 years before that, it was complete shit. And that's what you don't want. So you want to test during quiet phases. You want to test during low interest rate, high interest rate, COVID, all these things. And then if you see that your strategy still performs relatively well during all those periods, you have something to work with. Replay mode or not? This is also a question I get, and it's complicated. If you have a completely mechanical strategy that can be automated in an EA, so an expert advisor, then you don't need to use a replay mode. If there's anything that you can't program, you have to use the replay mode. So ask yourself, when you've built that strategy, is this 100% programmable? If it's the case, go for it. If it's not, use the replay mode, because you want to do the testing the most objective way possible. Otherwise, the results are meaningless. And most people test it completely the wrong way. And that's why they get wrong backtesting results. And then they wonder why they can't trade live and make money there. So figure that out for yourself. When you're in doubt, just use the replay mode. That's then the best option. But you don't always have to, but in most cases, yes. I would say use the replay mode, but ask that question to yourself because it's quite a personal thing. Now, with that in mind, questions and more. If after watching this video, you still have questions, maybe about your particular strategy in more detail, go to this website and you can send me an email with your question. If it's just more of a general question, leave it in the comment down below. But if you send it to me via my website, I can give you more detailed feedback about your particular question. I also quickly want to say the Discord channel that I have, like I said in the beginning, below this video in the comment section, you'll find a link to the Discord channel I created. There you can connect with me, other like-minded traders, and you get access to exclusive content that I don't post on YouTube or anywhere else. Now, I want to end this with one tip. Always be objective. Can you trade the strategy the exact same way in the live markets as you did when backtesting? This is really important because some people find they are happy when they find an edge in backtesting, and then when they try to trade it live, it's just not possible. So when you're developing a strategy, when you're testing, always keep that tip in mind. So I want to end this video. Right now, you should know what mechanical trading is, what the benefits are, how to build your own strategy, how to backtest it, and what to look out for. And keep this tip in mind when you're developing a strategy. Hopefully you learned a lot. Like I said, if you have questions, let me know. Subscribe, like this video, and then I'll see you next time.